it's important to spend your time in areas you think you can add value, and areas where you think you can make a meaningful difference. And I think having a passion for something gives you the desire, where you've done a 12-hour day to still respond to that email from the founder that wants your help, right? And I think that just doesn't quite apply if you're investing in something you don't really care about. You're just doing for the money.
All right, I am here today with Nick Shekerdemian, and he is a multi-time founder, a Teal Fellow turned investor, and he's had an exciting journey from startup entrepreneur to investor, and he's going to tell us all about all the lessons that he's learned, the companies that he's invested in. So this will be a really, really exciting journey to hear from Nick. Nick, welcome to The Confident Investor.
Thanks a lot. Happy to start at the beginning. So I started my entrepreneurial journey pretty young. So I set up my first business while I was studying. I was studying Chinese at Oxford, and really I think that was kind of where I started getting waylaid from studies and kind of started getting hooked on the startup bug. My first business was in the education space, and spent a lot of time focused on China at the early parts of my career. A part of kind of, I guess, my journey started when I moved to Beijing when I was 19, and really started thinking about what I wanted to do outside of class. And so that kind of led me down a path to try and figure out what that looks like. And for me, that was, education was what I knew, and education was a space that I felt pretty comfortable with. And so I set up a platform to help kind of Chinese families connect with university students all across the US and the UK. Our thesis was there are a whole bunch of people that are earning, whatever, 7, 8, 10 pounds an hour in the pub or in a shop, to try and earn some cash while they're studying or doing other things. And there are a whole bunch of people in China and the kind of greater region where I was spending a lot of time who really wanted to connect with those people. And so it was pretty simple. I was pretty young, but we created a matching platform so that they could connect seamlessly online. And that took me, as I said, kind of pretty far away from my studies, and ended up with me getting the Teal Fellowship and spending a bunch of time, I guess, having my eyes open to Silicon Valley a little bit, and trying to think about, I guess, what I wanted to spend my life doing. And I think for me, I haven't really looked back. It's been, working with entrepreneurs and building companies and solving problems, which led me to build my second company, Head Start, which until very recently I was the CEO of, and now still heavily involved as the chairman. But that was a platform that was, I guess, much more mission driven. I think this is going to be a theme of a lot of my career. It's like trying to focus on mission and purpose, and trying to drive impact. And for me, that manifested in another thing that I knew quite well, which was the kind of process a lot of my friends were going through, applying for jobs and internships at companies. And I had this kind of big frustration that a lot of people ended up doing things that they didn't want to do really, and doing things that weren't really kind of core to their passion and purpose. And they just ended up doing them because it was kind of the done thing to apply to a whole bunch of jobs in the city and other places like that. And so I created a platform to help kind of large organizations kind of automatically evaluate job candidates without the kind of bias and subjectivity, and at the same time can help young people figure out what they want to do. And we ended up working with, and still to this day, work with a whole bunch of big Fortune 500 companies and thousands of people who use us to, make sure they end up in the right job, and make sure the process is fair and smooth and good. And so, built that, and we went through YC and went down the kind of pretty typical venture capital journey, raising a bunch of capital. And I think in parallel with that, this is where I kind of started investing. And I guess when you get thrust into the startup world and you don't know anything else, at the minute you start earning some capital, at least in this was my case, I just wanted to figure out what to do with it. And there were so many exciting companies around me that I really wanted to get involved with. But obviously when you're a founder, you're pretty heads down. And so I just started angel investing. And that took me to today, building the Venture Collective, which is kind of my new baby, and working with an amazing team of people, supporting young entrepreneurs and emerging founders, and people that I guess don't necessarily have the same opportunity I now have to connect with other investors, supporting them and getting them off the ground.
Awesome. So it seems like you've really been driven by your your purpose and passions, rather than taking this conventional route. Where do you think that willingness to take risk came from?
Honestly, I had this big belief that if you start early, there's not that much risk other than societal kind of tut and, oh my God, I can't believe this person's, leaving university and, doing something on their own. I think the further along your life you get and the more responsibility and things you have, I think the more the risk becomes. Ultimately, I guess my cost benefit was, can I earn as much as what I would be earning in a graduate scheme or a graduate job, running my own company and doing my own thing? And with that as the benchmark, will I learn more, meet more interesting people, have a better time doing so, even if I'm working just as hard or if not harder? And for me, that's the path that I took. I think it's not for everyone. I don't think everyone should be an entrepreneur. But I do believe that, when you're very young in your career, honestly, every path is a path you can take, and one doing something yourself is maybe slightly more risky in terms of being able to afford your salary. But I think if you care about a problem enough and you have enough determination, I think that you can at least get to a point where your company is moderately successful to the point where you can afford your own salary.
Mm. And do you think that being an entrepreneur has made you more empathetic, more knowledgeable as an investor?
I think it definitely helps. That's not to say that there are not amazing investors who didn't, build their own company. And I would also say early employees at companies can sometimes kind of get the same experience depending on how the founders treat them and how involved they are. But equally, one of my partners, Elliot, and my other partner, Gina, neither of them have a background as an entrepreneur. Both of them are hugely successful and great investors. And so I think you either have to build the pattern recognition by doing lots of angel investments and being very involved and happy and willing to help as much as you possibly can, or you should probably do it yourself. And I think you can learn both ways, but I think doing it yourself probably gives you a slight advantage.
Got it. So what's your approach to investing, and has it changed over time?
Yeah, I think, when I first started investing, I basically, as an angel, bucketed everything into two things. So one was things I knew. So for me, that was, education, enterprise software, the stuff that I'd spent my time building as a founder. And then the other half was things I knew nothing about, but really wanted to learn about, and things that I guess I was disappointed I hadn't been excited enough to learn at school. And so that for me manifested in a whole bunch of med tech and biotech and deep tech and quantum and all these interesting things that half the things I didn't even know what they were and what anything about them before I started. And I just kind of started surrounding myself with the smartest people I could find in those fields. And I guess using angel investing as a conduit for learning. I think now that's evolved into, I wouldn't say I'm an expert in anything. I feel quite generalist, but I have some like pattern recognition in certain areas. And I think for me, my general filter is, am I passionate and do I care about the mission that this company is solving? And this is just for me personally. I can't invest. I very much struggle to invest in things that I don't care about. They're not solving a problem that I am passionate about. And that means there are some amazing companies who make millions of dollars in revenue, and I can't invest in, and I will miss out on those outcomes and returns. But for me, it's, I think, particularly now I'm doing it as a kind of professional job. It's my new job in many cases. I think it's important to spend your time in areas you think you can add value, and areas where you think you can make a meaningful difference. And I think having a passion for something gives you the desire where you've done a 12-hour day to still respond to that email from the founder that wants your help, right? And I think that just doesn't quite apply if you're investing in something you don't really care about. You're just doing for the money.
So if you were to give advice to a first-time investor, would you recommend that they start in the bucket where they already know, or in the bucket that they want to learn about and are excited about?
I think it depends what they're looking for, right? So if they're looking for outright financial returns, and the only metric they define success as is financial returns, then you should probably stick to things that you know, right? If you work in finance, then think about fintech, or if you work in real estate, think about prop tech, or whatever that might be. But I think that if you weigh learnings and amplification of your network and amplification of your knowledge and other things like that, then there are other things that start to weigh in. And I think a lot of people get quite siloed in thinking specifically about pure like financial returns and don't feel comfortable going out of their comfort zone, which is totally fair and fine. I think for a lot of people's first few investments, I think to get comfortable, you probably want to just stay as close to where you know as you can. But ultimately, I think it depends, on your risk profile. So I think for a lot of people, there are plenty of investments I've made where I still to this day, after 20 meetings with the founders, still couldn't quite tell you the ins and outs of everything that they do. But I know that I back the founder. I know that I trust what they're doing. I know that the story is fantastic, that there is some validation in what they're trying to do. And thereby you kind of go with it. And I think venture's a people game. And so you're investing in people. And so for me, I would rather invest in an amazing founder with an ambitious project than someone I really feel like I can work with, than somebody who's solving maybe a much simpler problem where the journey they have to go on isn't so ambitious and where the impact to society isn't so big. But that's just a personal leaning for me, and I think it's not for everyone.
Got it. So for you at this point, it seems like you're also really mission driven, especially in your investments. Why is investing important to you, and so much so that you make it as your top priority?
I think so historically, a lot of people believe that like philanthropy is the best way to create impact, or maybe even the only way in some ways for some people to drive impact. And I think that's not 100% true. I think you can create impact in all different ways. And I think venture is actually a really interesting kind of emerging way of driving inordinate impact in the world, whether that's, cell agriculture for, new clean meats and foods, or, the future of farming, or, whether that's inclusion and diversity, which I spend obviously a lot of time in myself, or whether that, there are a whole bunch of different things that are positively changing the world that aren't just philanthropic. And I think historically people have seen kind of social impact as this kind of grotty word from an investment perspective, where it's kind of frowned upon because it's kind of impact, but it's also kind of slightly for profit in some ways. And I think that there's this kind of weird tension. And I think that for me, venture capital is being at the forefront of innovation and using technology to change the world, I think is much more transformative in my eyes in many cases than just pure philanthropic dollars. And I think that you can almost do a bit of both. It's why we spend a lot of time at the Venture Collective working with family offices, with high net worth individuals, people that maybe do have the opportunity and the liquidity to be able to invest in stuff and have that fortunate opportunity where they don't need the money immediately. They might need it in 5 years or 10 years, but they don't need it right now. And I think for many people, rather than giving X amount of dollars to charity, if they can find the right, and it's a balance, right? I wouldn't say don't give any money to charity, of course, but it's a balance. I think for some people, they think that their $10,000 that could have gone to charity could maybe be amplified to a lot more impact through investing in emerging technology that has the ability and the mindset to grow and create inordinate impact in certain fields. And so I think it's quite an interesting kind of new emerging kind of conduit for doing good in the world.
Okay. So in addition to this mission, are there specific areas that you invest in, and why are you focused on those?
So from a personal perspective, and also this kind of carries through into TVC as well, I think we invest in founders who have a differentiated view on the world, so they see the world through a different pair of eyes to everyone else. We invest in founders who are mission driven and driving deep positive impact. We like companies that have quite clear kind of defensibility. So, they're not just taking something that already exists and doing it again in the same way as somebody else could come and do the same thing to them. We have a really big leaning towards underrepresented founders, and we define underrepresented both demographically speaking, of which, there are multiple different forms of underrepresentation there, but also, where you grew up, are you a young founder, a first-time founder, a technical founder, whatever that might be. We view that as people we can help get from, maybe the position they're in right now, where maybe capital is an object, or connecting with people is an object, or, there are a whole bunch of distractions that are stopping them get to success. We view that as a means of, us being able to alleviate those barriers and give them access to the things they ordinarily wouldn't have. And that's, for us, is kind of where we like to add our impact.
Great. And I'm curious, at what point did you start gaining confidence in your investing capabilities?
Gosh, I don't know. I mean, I think I think you have to have some confidence to go out and do it as a job. And I think maybe there was some external validation there. I think at the beginning, to be honest, at the beginning of my investing journey, which kind of started around when I was going through Y Combinator or just before, I think, a lot of it is, and a lot of investing is being able to pull people behind a central vision for something. And I think, I don't know whether I'm good at investing, but what I think I do know is I think I can get involved with companies and help them tell their story better, or connect with other investors, or, get off the ground and think through strategic problems that are difficult. And so I don't know whether it's a function of me being good or being in the right place at the right time or being surrounded by smarter people than me. But I think over time, it's kind of an external validation. I think at the beginning, you think you know everything, and then you realize you don't. And then a year later, you think you know everything, and then you don't. And you're constantly learning, and the quality of your deal flow and the quality of things you see gets better every time. And I guess the hope is every investment you do is better than the one from before.
Got it. And what advice do you have for new investors who are considering making their first investments? We've talked a lot about the founder and their vision, but what are some other factors that someone should be evaluating, especially if they might not get that one-on-one time to really get to know the founder?
I think ultimately, your decision when you decide to invest in something is, do I want to follow this journey? Like, venture is a long-term game, right? Unless you're investing pre-IPO, it's a long game. So do I want to follow this journey? Is it interesting to me? 2, do I believe in the version of the world that this founder is trying to tell me will be existing in future? 2, 3, do I believe that it's a space that I feel comfortable in, and a space where I feel like I have some form of knowledge, whether I can impart that knowledge on the founder or not? And do I think I understand what's going on here? I think for first time or early investors, I think, for the way I think about things is the investments that are safer tend to be ones that have stronger barriers to entry and have a less crowded space in general. There are plenty of people that understand, for example, the HR technology industry or the education technology industry, but there's also thousands of people trying to build companies in those spaces. And so, we find amazing companies in those spaces, but the difference between a company that's going to do well and another company may be a function of network, capital, a whole bunch of things that aren't inherent to the product. I think those industries sometimes can be harder to build success in if you're writing very small checks. The other thing I think about is trying to get into deals where where you're co-investing with other investors that you respect, and they might be bigger investors. You might be writing $100,000 on a platform, but where the lead investor or people there are people you've read into, you respect, you like the way they think. That's often helpful, and I think it helps you have some confidence that the people around the table are driving them in the right direction.
Makes sense. What are some of your most successful investments, and could you share with us your thought process that led you to making those investments?
God, it's a tough question. I mean, obviously venture is a long-term game, and so I think it depends on how you define success. There are a couple that I really like, and some of which I've invested in several years ago, and some of which I'm investing in or I have invested in recently. So I did one of my first investments. In fact, two of my favorite investments are two of my first investments. So one is in a company called Vitro Labs, which is a founder called Ingvar Helgeson, who is based in San Francisco, and they've basically worked out how to recreate leather from animal cells without the need to kill and slaughter animals. And it's a lot of people have tried to solve this problem, and a lot of people have gone about it in a variety of different ways. These guys, and Ingvar in particular, had a big vision around the fact that the leather industry wants to innovate. They want to become more ethical. They want to get better, but they also don't want to compromise on quality, right? They want to offer fake leather to their clients, especially at the high end. And so the breakthrough they made was that if leather is effectively animal skin, then couldn't you just recreate animal skin in the lab from cells? And they spent 3-4 years in R&D working on it, and finally kind of starting to come to commercialization now. But for me, it's an industry that's ridden with poor ethics, and these guys have a really deep mission around that. So I really like them, and actually we're continuing to support now under the Venture Collective as well, outside of my personal investment early on. Really like them. I really like one of the first companies we did through the Venture Collective called Dig Labs, which is in the pet health space, which is two awesome founders in New York, Tara and Jess, who have this kind of vision around preventative healthcare for pets that is really compelling. Right now, if you're a pet, you can't just Google why you have a headache or a bad stomach, or you can't call up the doctor and go to them, on demand. It's an emergency-driven system, which exists in humans as well. There are a lot more people trying to solve the problem in humans. For pets, there's basically nothing you can do, and it's a really interesting space because you go to your vet checkup once a year, or you go when you have a massive problem if you're vomiting or whatever that might be. And for this, Dig Labs have created this amazing kind of dashboard that shows all of the contextual information about your pet, their food preferences, etc. But also have this really interesting kind of stool analysis tool, which sounds super unsexy, but effectively, they realize the only thing that a pet does on a day in, day out basis is go to the toilet, and or in their own way, and they created this really interesting piece of kind of computer vision software which allows you to take a picture of your dog's stool, or auto-analyze it and compare it to the microbiome, and kind of create this like longitudinal data set around how the health balances over time, which will be transformative for preventing healthcare and picking things up early. Just things like that, which I think are really interesting. Not everyone in the TVC team likes as crazy things as I do in the kind of life sciences-y world, but they're some of the ones I really like.
Got it. So would you say that you gravitate towards these kind of moonshot investments where, as you said, like crazy, where you're really trying to push a different view of the world, or like things that haven't been made possible before?
I personally gravitate to those things, and my team bring me back down to reality. But no, I think we've done all kinds of stuff. We did one in the special ed space recently, which I love, a company called Lift Ed, Andrew and Joanne, and I think that's a much more digestible, much more down to earth thing. They have this vision around special education, which is that special education learners right now have a pretty poor time from a tracking and improvement perspective. They have no systems that adequately digitalize the process of tracking what is and isn't working for special ed learners. And a big percentage of the US is in special, requires special education support, and very few of them get anything digital. And so they've created this amazing platform. In the beginning, they bootstrapped the business, relied on grants, and really hustled to get the thing off the ground, and they're doing an extraordinary job, working with public and some private schools in the US to try and make that experience better for learners, so that when they change grade or they change school or they, work out, what things are and aren't working for them, they can optimize that experience so that every learner has an equal, access to education. So there's a whole bunch of different things we do. It's not all moonshots. I just happen to have a big affinity to things solving big problems. That's just, it's just who I am, I guess.
And what would you say are perhaps some of the biggest mistakes or maybe most important lessons you've learned from investments that didn't yield the returns that you wanted?
So I think, I'm still earlier in my kind of angel journey than other people. And so I haven't had like so many catastrophic blowouts yet, but I'm sure there'll be some to come. I think my learnings so far have been, I think as long as the space is big and the market size and market opportunity is big, I honestly think that the determination as to whether an investment is successful or not is like purely driven down to the founders. I really do believe that. So I think this doesn't apply in a super niche space, because a lot more things can go wrong in a super niche space, and the opportunity maybe isn't quite there. But rarely, I think founders kind of fail, or companies not succeed based on some competition or some regulatory change or some big thing that affects the company, outside of maybe in the medical industry, where of course FDA processes and stuff are difficult. But I think in general, honestly, it's pretty much purely down to the founders. If the founders are the right balance between super confident, determined, and driven, but also humble and great storytellers, etc. And I think people also, even if they aren't born that way and don't have that in their exact DNA, I think provided they are capable of recognizing their weaknesses and surrounding themselves with people that can solve those issues, I think the same thing still applies. Not every founder is an amazing storyteller or great at, certain things. Some of them might be more product focused or numbers focused or whatever that is. But in the early, they recognize their weaknesses and surround themselves with the people that can solve those issues. I think the better, and then it becomes purely down to the early team. And for me, I back companies largely at the pre-seed, seed, sometimes Series A stage, where people are still forming those things. And I think the worst investments I've made have been where the founders just haven't had some of those elements, whether that's they think they know everything or they think the world's against them, or there are a whole bunch of different things which I think just are ingredients of good founders. And then I think it's just about moving fast and hustling hard, and I think that's more important than the companies themselves. It's rarely the idea that's the issue.
Are there specific questions that you ask in the diligence process?
The first thing I always ask every founder is, why are they working on this problem, right? Because if you start with that, you start with the why, and that drives the entire story. And the reason I ask that is because it encourages people to start telling me a story rather than pitching me a deck. I'm much more likely to invest in a company when they've told me an amazing story, and that preferably a true and believable story. But I find it really difficult to just dive into something without understanding why they're doing this and why they're there. And so that's where I always start. And then I think think about how the founders know each other, and where, if there are multiple founders, and where they got to know each other. And I think the next most important thing for me is, what if money isn't an obstacle, and you could run this company in the way you want it to and get it to the scale you want it to, what would you spend that money on, and what do you need, but also what does the world look like in 5 years when you've done that, right? They're the things that I care most about. Yeah, like it's great having a financial model and all these things, but most of those things mean absolute zero when you first start the company. You have to have a great conceptual business model as to like how you're going to get this business monetized in some way over time. But what you think your revenue forecast is going to be in 2 years time or 3 years time, that doesn't really matter so much to me, because it's probably not going to be accurate. But thinking through how you're going to monetize, how you're going to get to market, what the world looks like if you do succeed, why you're doing this, how you got to know each other, what talent are you lacking in the team, these kind of things are the things I spend my time on personally. It's just my approach.
What industries or types of investments are you most bullish on going forward?
So I think personally, I like, so there are a couple of kind of horizontals and some verticals. So I think the general personalization of the world, which is quite broad, is definitely interesting. I think that could be in healthcare, that could be in education, that could be in everything. I mean, there's a lot of stuff there which I think is really interesting. So I think that's going to be pretty powerful going forwards. I like like collaboration in the kind of new economy. So with everything shifting and everything changing so fast, like what are the best ways in which people can collaborate, work together, etc. So that's some future of work, but there's a whole bunch of other elements to that as well. And then I really like the kind of new, like cell agriculture stuff. So whether that's in fashion with Vitro Labs, or in food, or in other things, I think that's a fascinating space as well. I'm starting, and this is new for me, but I'm starting to really like space as well. Not in the kind of hype cycle of SpaceX and Virgin Galactic, but actually kind of the secondary order effects that are being enabled by the hype that those companies are giving. And so, we did a company, for example, recently called Axiom Space, which is one of the bigger checks we've done. And they're kind of privatizing the International Space Station right now. And so going through a process with NASA and others to take the ISS private. And for me, it's fascinating, not because they're privatizing the ISS, but because of all of the applications that a new privatized, non-politicized International Space Station will do for medical research and telecoms and all these other things, which right now there's not really great ways in actual outer space to be able to test and do these things. And so outside of space tourism and outside of national space programs, I think there's a whole realm of things that are going to be opened up by this privatization. So for us, we're extremely bullish on Axiom, and it's been one of our most exciting investments to watch so far.
When you're diving into some of those new industries that you are new to, and you don't have that background, what is Where do you start your research?
So I think the thing that I guess I am happiest about in my career is the fact that I guess maybe through the nature of the fact that I didn't know very much and still don't really know very much, and thereby have spent my entire career surrounding myself with people that are way smarter than me who are able to help me figure out some of these problems. I think the first thing I always do is go to founders I've met before and ask them, and this is the kind of beauty in what I was kind of referring to earlier, that it is a financial investment, but for me also it's building knowledge and network and community. And so I often will go to, if it's medical, I'll go to a couple of the medical investments I've done. If it's, in the cell agriculture space, I'll go to people, I've invested in there. And so I think for me, that's where I start. And that's because I, know where my weaknesses are. I'm not going to spend 10 hours reading research papers and books and report. That's just not how I do things. I have great people on the team, the team that love doing that and do that. It's just not really what I do. So my first thing is I try and understand the problem by talking to people that are, peripheral to that company, that aren't competitive, that can help me figure that stuff out and help me work out whether I should be really excited or where the holes are. And then, I try and conceptualize it in the simplest story I possibly can, right? And that means sometimes there's a really cool niche piece of the medical industry that I just can't invest in because I just can't understand that kind of broader story. It's just too niche for me. But a lot of the ones I've done have quite big missions and quite conceptually easy to understand once they've explained it to you 100 times in my case. but I have to just spend the time getting to know it, and it takes me longer to get this stuff than some other people, but I kind of love it, and I like to spend the time getting to know.
When you say you condense that into just almost a micro concept, do you almost have some sort of gauge where you can say, you can pitch it in a couple sentences or talk about it yourself very simply?
Yeah, if I can't do that. So I like investing with other people, right? I don't, venture capital has become a bit kind of elbows out at the kind of Series A, Series B, Series C, where you have some firms who just want to take the whole round. I like the seed and pre-seed where it's like a lot more collaborative. And so I tend to invest with a bunch of people, sometimes, within the venture collective, which is where I'm spending most of my time on the investing side now, but historically just friends and other people that I've met along the way that I like and think, they think in a good way. And so for me, if I can't explain why I want to invest in this company in a few lines, it's pretty difficult for me to bring other people in along the ride. So I try and get to know it as best I possibly can. And once I do, I repeat it to the founder and ask them if I'm saying it accurately or I sound stupid. And if I don't sound stupid and I'm saying it broadly accurately, then that's kind of the ammo I need to get excited about the company. And that's just how I do things.
So if you had to sum up what makes a good investor, what sorts of qualities, what would you say?
A good investor. I think, so I think there are a few different variances of good investor, and I think it depends on the stage that you go in at. So for very early stage, I think it's people that recognize that you're investing in someone and it's their company, not your company. And so there are times where your advice isn't going to be listened to, and you can't get angry about that. It's just, you should be investing in people who you think can do the thing better than you can. If you think you can do the thing better than them, don't invest in them. Go do it yourself, or, whatever you want to do. So I think that's one thing. I think two is, a good investor is like, in my opinion, and this doesn't apply, of course, if you're doing it a really small check, but a good investor is like at least wants to help in some way, whether they can help or not. I think a good investor wants to help, whether that's doing an intro or whether that's helping them think through something. It's, I think a good investor should have that attitude of I want to help, I want to get stuck in. That's why I'm investing in a company that's going to take me 7 years to make any money, right? I think three, I think a good investor also is the investor that when they receive a negative investor update that is not positive, things aren't going well, is the one who reacts proactively rather than the one who reacts in I don't care about that company anymore, or I've lost interest, or whatever that is. And that doesn't mean you have to stump up bridging capital if you don't have the capital, but it's, it's just you're there with them on the journey, and the journey is like that, right? And it's not like that always, although every graph of every great startup founder's deck is like that, but it's not actually like that. I honestly don't think there's a one size fits all for a good investor. And some investors are much more financially minded and driven than me. I'm not the best person to tell you whether someone's financial forecast or financial model is good. But I can tell you whether I think their story makes sense or whether they miss some things, whether they're a good founder. And those things I spend my time thinking about. I mean, the best investor teams up with people that can solve all the things that they can't do and know what those things are, the same way as the best founder does the same thing, right? I think it's a people game.
Yeah. So it seems like investing is something that has really brought together a lot of things that you love, a lot of things that you're interested in, and it also gives you the pathway to explore new things. But what would you be if you weren't an investor? What would you be doing?
That is a great question. That's a good question. I mean, outside of I did an internship many years back, but outside of that, I haven't really tried anything else. And so I think if I'd never gone on the entrepreneurial path, I probably would have ended up in some version of finance, law, private equity, somewhere in that, or maybe consulting, something like that. I would have probably ended up there. Would that have been the best thing for me? I have no idea. I mean, I find those industries interesting, but I don't think I would have been having as much fun as I am now. If I was to try and leave this industry and entrepreneurialism and tech and these things now, I think it would be pretty difficult. I don't know where I would even look, if I'm honest. But I would probably end up in something tangentially related to the things I like. Maybe that's working with medical technology companies who have deeply scientific backgrounds who want to commercialize that and raise capital and do those things in-house versus out of house. I don't know. Is the answer. I think I've qualified myself out of a lot of jobs.
Yeah, once you work for yourself, it's kind of hard to go back, huh?
Yeah, especially if you take the TIL fellowship and don't finish university. That's also, you qualify yourself out of some paths, but I'm pretty happy with where I am, and I think I can keep going at this for a while until the industry doesn't want me anymore.
Last question: what are the most important takeaways that you would like to leave our audience with when it comes to beginning their investing journey?
I think there's a lot of takeaways. God, I think focus on the areas that you really care about. Figure out why you're investing, because I think that shapes the way in which you invest. If you're investing for pure financial return, if you're investing for knowledge, if you're investing for excitement, you're investing for fun things to tell your friends when you go for a drink. There are a whole bunch of different reasons why people invest. I think figure out why. It's the same as everything for me. Everything kind of starts with why. I think be patient and realize that venture capital is a long journey. And if you're not willing to go on the journey, then don't go into venture capital, or at least don't go into early venture capital, right? There's growth stage stuff and other things, later on, which have a shorter time horizon. And I think the last thing is just surround yourself with a bunch of people that you want to do this with, whether that's on an online community, whether that's an offline, your friendship group, whether it's whatever. I think venture is a funner thing to do with other people who can complement you and your skill set, who can help you think through things, who can share in the ups and the downs with you. It's not that fun having loads of ups by yourself, and it's not that fun having loads of downs by yourself. And as an investor, you kind of mirror the ups and downs of all your portfolio. So they're probably the main things I would do to someone say to someone getting started in venture. And you can start small and try and scale up from there. And I think it's a learning journey, and I think it's a lot of fun. But it's not for everyone.
Awesome. Well, this has been a really great and informative interview. So thank you so much, Nick. And I'm excited to hear all about your new investments through the Venture Collective, through your angel investments. And thank you again for sharing all of your knowledge.
Thanks so much for having me.